Welcome to the channel's valued friends. US dollar benefits from economic developments over the past week. This week we saw more evidence of the global economic recession, so the Fed seemed very concerned about the current situation, and Jerome Powell, president of the US Central Bank, noted that the economy is at its worst since World War II. He stressed the importance of the US Congress stimulating the economy, and that the task of saving the economy now rests more with Congress than on the Fed. Gold prices rose strongly as central bank stimulus around the world continued and fears of a global recession were expected. Stock markets fell as political tensions between the United States and China returned. But for oil prices, it has been able to rise strongly, taking advantage of expectations of a recovery in global oil demand as well as a reduction in production by many producing countries. Gold prices saw their best performance in 3 weeks, rising and approaching their highest levels since November 2012. Riyad Carter, head of research at Equity Group, said, "Gold prices have benefited from the safe haven demand along with the demand for precious metal to cover the risks of reduced purchasing power of cash, and central banks around the world are directing a low interest rate policy, along with record asset and bond purchase programs, threatening to reduce the purchasing power of cash." At the same time, gold prices benefited from the confirmation that the global economy was in its worst recession in 90 years, which the Fed described as historically the worst. Gold prices climbed after touching the lowest at $1,691, trading above $1,730 per ounce, and the bullish trend is expected to continue amid increased political tensions between the United States and China. US President Donald Trump has said he does not want to talk to his Chinese counterpart, stressing that if relations with China are severed, he will save $500 billion. The president accuses China of not taking adequate measures to contain the coronavirus. These remarks were also worrying for the markets, and despite the rise in US stock indices on Thursday, they remained low throughout the week, as political tensions and the return of traders' concern over the collapse of the January 2019 trade agreement dominated the atmosphere during the week. The International Energy Information Administration, IEA, also indicated that it expects global inventories to decline in the coming months, while the agency's official report showed an unexpected 0.7 million barrel drop in US inventories, spurred by a surge in oil prices. Producing countries such as Saudi Arabia, the UAE and Kuwait are also moving to voluntarily cut production early next month by 1.180 million barrels per day, in addition to the 9.7 million barrels per day agreed at OPEC that has been in place since the beginning of the month. Most beneficiaries. The US dollar was the main beneficiary of the economic and political developments during the week, rising against the basket of major currencies. The US dollar index, which measures the dollar's performance against the 6 major currencies, gained more than 1.3% over the week, pushing the dollar's strength lower to 1.0774. Economic data released from Germany this week showed that the economy contracted at the fastest pace since 2008, with official data from Germany reporting a 2.2% drop in GDP for the first quarter of this year. The pound also fell against the dollar, and the pound against the dollar pair touched its lowest level since March 26, falling nearly 2% against the dollar. The pound has faced considerable pressure with expectations that the UK economy is heading for its worst recession in 300 years, with the spread of the coronavirus and quarantine measures forced by the British government since March 23. What contributed to the rise of the US dollar were the very negative economic data released from the United States this week, as those data demonstrated the depth of the economic recession. Traders turned to the dollar as a safe haven and the currency of liquidating financial positions. Inflation data showed prices fell by 0.8% in April, demonstrating a significant weakness in consumer spending, which accounts for 70% of US GDP. Data from the US job market also show a significant rise in the number of unemployed, with weekly subsidy applications showing a 2.981 million increase in the number of applications. The retail sales sector also continued to contract at a record pace. Next week, we'll stop with Japan's GDP data, which is likely to show a strong contraction in the economy. We will also await the testimony of the President of the US Federal Reserve before members of Congress. Buy in a new episode and theme.